All right, good afternoon and welcome to the Sage Investor webinar. This is Jen and I'm a co-founder of the Sage Investing Group along with Maggie and Lana. We are a multifamily apartment investing company and our mission is to provide value to our investors, our residents, and the communities that we invest in. So today, to bring you guys value, we are very excited to have Emma Powell join us as our guest speaker. Emma, she is going to be talking about the elephant in the room when it comes to private investments, because those aren't required to be registered with the SEC. So in these type of situations, how do you know who to trust and what to look out for to make sure that you're placing your hard-earned money in good hands in the effort to diversify your portfolio? So Emma, she has some valuable lessons to share based on incidents that she has witnessed and some of her own close calls. As former auditors, this is a fascinating topic for us because our former job was, in short, to detect financial frauds. So for us, it's always very interesting to hear about these type of stories because you can always learn a thing or two about how to prevent it from happening to you. Now, before I pass it off to Emma, I do want to give you a little background about her so you get to know her a little bit and just let you know that at the end, we will also have some time for Q&A. So Emma, she is the owner and operator of the Highrise Group, along with her husband of 23 years, Troy Powell. Together, they built a portfolio of 92 units within an 18-month period, which is really impressive. The power couple, they have played multiple roles as real estate investors, including partnering on a variety of deals as private lenders, deal sponsors, co-owners, and syndicators. And they are currently redeveloping 2 warehouses that they own in downtown Salt Lake City Opportunity Zone into a 161 unit high-rise apartment complex. So Emma, before she became a real estate investor, was a former real estate photographer, and she currently lives in Salt Lake City with her husband and 6 homeschooled children, ages 22 to 8. So she is pretty incredible to have such a full plate and still be such a successful real estate investor. We are delighted to have you here, Emma. Welcome.
Thank you. I'm really glad that you gave me the opportunity to talk about this topic because, as you say, it's the elephant in the room. It seems to be the thing that nobody really wants to discuss because we're all out there trying to raise capital into private placements. And it seems like if we talk about the possibility of either financial fraud or just mismanagement of money, then that's usually what turns into the fraud is mismanaging originally, and then they start trying to cover it up. But nobody really wants to bring it up because it might put the cat out of the bag that people could get scammed on these types of things. And I think that the more in front of it you are, the more trustworthy that you look, and the more informed you are about the ways that these kinds of frauds can happen, the less likely they are to happen, at least to you or to your group. And I'll just start out. I just wanted to tell some stories about some experiences that we had and kind of cover some points. So basically talking about how this topic can empower you to make more confident investing decisions. And it can also empower you to do a better job of raising capital and how to have those conversations with your investors, because I think it needs to be said and we can't be hiding from it. And so, given those two things, it's just some of the stories in my background to give you more of that confidence as a capital raiser or as a passive investor. So we'll just start out kind of chronologically from when I had my first taste of financial fraud. And it was actually when I was a kid, when I was a teenager. And I'm not going to mention any names or give any places or anything that's overly identifying because, this particular person has since passed away, actually just, within the last year. But I met him when I was a kid and he gave a speech at a youth night at our local church. And he spent a lot of time talking about his real estate investing and some books that he'd written. And at the end of it, I was just waiting for him to wrap the whole thing up in and make it an analogy for something religious, because we were at it was on a Sunday. It wasn't even like a weekly youth night. It was a Sunday school lesson. And he got all done and gave us out a free copy of his book, and that was it. And I thought, I cannot believe that they just had this guy come and speak to us during Sunday school. It just seemed really odd because there was really nothing about religion or any type of spiritual thought, devotional of any kind. It was just about his history and real estate investing and how great he was. And I just, that was really a turn off to me. And that was the first time I had ever met him. And after that, we kind of got to know their family a little bit. I wasn't really friends with his kids, but when I got out of high school, a bunch of my friends started working for his company, packaging books and selling, the mailing off the tapes and all this kind of stuff. And I never worked there. I don't know. I just always has kind of bad taste in my mouth. And so I think that's the first lesson. If someone's rubbing you the wrong way, listen to your gut, because what we're going to find is that the most skilled people at pulling off these financial frauds typically are the most subtle. They're going to be that false sense of charm. If you hit it off with the person really, really well, that's another red flag. But for me, in this particular case, it was because something just wasn't sitting right. The focus was just a little off. It wasn't on what it should be on. Like in that particular instance, it should have been on, I don't know, something about Jesus would have been really nice, but because we completely missed that, if something's a little bit off, if the focus seems to be off, red flags. But again, I'll tell you some stories later about some people where I didn't get that off feeling. It was quite the opposite. It was the extra charm, and you just hit it off. And we'll get to why that's important here pretty soon. But moving along with this particular story, he basically had most of the kids and teenagers that I knew working for him, and I had gone off and done something different. I was actually became a nanny for a pair of physicians. And that experience really changed my life because they were obviously physicians and they were investing passively. They've since gone on to do a lot of passive investing in real estate, and living with them for a year and a half and seeing how they raise their kids and how they manage their time and how they manage their business and their medical ethics and their business ethics. And just really high performing people like valedictorian at Yale or something like that, certainly magna cum laude. And they had the largest cancer practice on the West Coast. And the wife actually wrote the original textbook for detecting breast cancer with ultrasound. So these are really high performing individuals and just really, really good people. And when you get inside somebody's house like that and you're able to see how they live, the books they read, the way that they manage their schedule, the way that they manage their disagreements, I think was really, really important. And so while all this was going on, when I was their nanny for a year and a half, my friends were all working for this company. And then I went off, moved off to college, got married. And a couple of years later, my mom asked me, she said, "Oh, did you hear what happened with so-and-so?" I was like, "No, I don't follow them. I never worked for them. I don't really, do I care?" And she said, "Well, he and his wife have both gone to prison." I was like, "What? How did, what did they do?" And basically what it was is accounting fraud. They got in there and made it look like they were making a lot more money than they actually were, because they're doing real estate and stock market trading. And so his wife, I think, went to prison for maybe 18 months and he went to prison for something like 60 months. And as soon as he got out of prison, they were right back to selling books and selling courses. And what you'll see is after this happens to somebody, sometimes you're going to see one of two results. They either go right back to the same stuff that worked for them because they know the operation and how to be smooth and how to get sales. But sometimes it actually is reformatory. They realize what they've done is wrong, and it actually makes them more careful to manage their finances and their accounting. And so that's one thing you have to ascertain. I'm not saying that people are burned because they have been to prison or they've been indicted on fraud. You just really have to figure out, have they really learned from it, and really be careful. And I would say always be investing the minimum with somebody who has a history like that. But I certainly think that when they go straight back into the same industry, that's a little bit of a red flag for me. Usually they'll go off and they'll work for themselves for a while because they know they can't raise capital. They can never be a fiduciary on a deal again. And so if you have things like that, that's concerning. I think if they get out in front of it, and that's one of the first things they tell you about themselves is, "I went to prison, here's exactly why." They don't try and make excuses. A lot of times you'll hear, when they're honestly reformed, you'll hear things like, "I knew it was wrong, but I didn't know it was illegal." And that to me is another red flag. It's like they did something that they knew was wrong, but they didn't know they were going to go to jail for it. It's kind of like saying I wouldn't have done it if I'd known I was going to get caught. So there was another experience. I'll move on from him, where we had moved, and we had bought kind of a nice house, as far as a nice house for us, and it was near some really nice neighborhoods. Like, it was a new neighborhood of cute little houses, but the surrounding neighborhoods had some really wealthy people in it. We met a lot of real estate investors while we were living in that area, and sort of started to befriend them when we first moved there. It was one of those situations where they were inviting us out to like backyard barbecues and going boating and things like that. And they kind of figured out pretty fast that we didn't have any money, because we had regular jobs and we couldn't be boating with them in the middle of the day and this type of stuff. And the invitations started to dry up. And so that's another red flag, when you think that they're just trying to get a read on if you're going to be a good investor for them or not. Do they really care about you as a human? And so that particular group, just again, that probably left a bad taste in my mouth, because I'm trying to think back to why I didn't want to invest with them. Because at the time when the investments were going around and all of our other friends were investing with them, why did we hold back? Why were we reluctant? And I can't exactly explain why, but I know those early days of feeling like, they know that we don't have any money. They know that we're employed, we're W-2 people, and they just kind of had to fill that out, and we're not really going to be beneficial to them in their businesses. It just didn't really feel like a real friendship. And anyway, so a couple of years go by, and there were a few things that had happened, when one guy, he wasn't actually even in the real estate investor group. He invested in other assets, and he started a company where he was basically a fund where he was taking passive investors in and buying companies and things like this. But it was always like, he invests in stuff. That's another red flag. What are they investing in? And so this particular one, you could look this one up very easily. He was buying an insurance company, and he never bought the insurance company. It basically turned into something where he was collecting money to buy this insurance company, but then he ended up using that money to pay out the previous investors for investments that didn't go very well. Never bought the insurance company. And I think that, I'd have to look this up, I can't remember. He made it look like he did buy the insurance company. And so there had to be almost an audit level to make sure that company that he purchased actually was purchased and it was actually functioning. He was very sophisticated about the way that he went about covering up that he'd used the money to pay off these previous investors, which, by the way, is a Ponzi scheme. The second you take money from investors to pay other investors, that's a Ponzi scheme. Now, it's fine to do that if it's a loan. So let's say you have loans that you need to pay. You can get more loans to pay those loans. That's perfectly fine. But if it's actual equity money that's coming in and they're using that to pay off the equity of previous investors, that's the moment that it turns into a Ponzi scheme. So we had some of our real estate investors were investing with this guy, and they were telling us, I got $10,000 in, and 6 months later he gave me 20. So I'm going to put more in this time, 50, 100, 150. By the end of the 3-year cycle, we had these more sophisticated investors were not investing as much money with him as they could have, because it's one of those things, they know the importance of diversity. And here's the protection. It's not necessarily the red flag, but watching what our sophisticated investor, friends did versus the people who were less sophisticated, who were putting in $800,000, $1 million in with this guy, or their entire nest egg with this guy. And when everybody lost everything, when the Ponzi scheme finally came unraveled and the investigation came about, the people who were left holding the bag were the less sophisticated investors who had invested their entire nest egg and their entire pile with this guy, versus the more sophisticated ones who maybe had 150, 250, but they had maybe $1 million liquid that they could invest. At the same time, we had another buddy of ours who was starting a tech company, and he invested a little bit. We invested in his tech company, just little bits that we could. We couldn't really afford the minimums, but since we were friends, and my husband ended up working for him for a while, and he was actually sitting on the board of another friend of ours who he and his family managed a publicly traded mutual fund. And so we had a lot of people in these businesses, and it wasn't odd for us that people were performing at kind of high startup levels and fund levels and things like this. But the ones who invested with him that were sophisticated ended up okay. They lost their money. But they didn't lose their entire life savings, their entire nest egg. There was one woman who basically had a life insurance settlement when her husband passed away, and she invested the entire pile with him because he basically told her he would take care of it. She was not a wealthy person, and she lost all of it. And now she's back to being pretty poor again. And that could have been life-changing money for her. Some of my other friends who had lost money in that investment have since come in to invest in other projects with us, and recovered that, and they were able to regain their faith. Some people in that group of people who lost money, especially the less sophisticated ones, really never will invest again. They got burned so bad, and they were so disillusioned by their friend and this good guy from the neighborhood. We all knew his kids, and they were so burned that they're really never going to get over that bitterness. And here's another survival technique. You have to learn from that experience, and you have to move on, because your hope of investing when you put that money with that person is the more important thing that person killed. They took your money, and that's bad. But when they take your hope and your belief that you can invest and make your life better, I think that's far more dangerous. And so learning the lessons of how to avoid it is what we're talking about right now. But that's probably the biggest lesson you can take out of it. And again, it's something that you have to remind yourself every time you see somebody else lose money, or you have a close call, or maybe you lost money, making sure that you're staying diversified to get across operators, across assets, styles, sectors, geography, and just protecting yourself and not ever going all in, especially not on the first couple of investments. And I think that's what's so alluring about a Ponzi scheme in particular, is they do give your money back with high returns. And then they lure you into investing more and more and more because, wow, this is so great. And so when you get to that point, you're like, this is such a great investment, I'm thinking I want to go more all in. That's a huge red flag. Huge red flag. Never, ever, ever do that. And the way that you avoid that is by having strict percentages of what you're going to put your money into. So for example, I'm going to have 80% of my investable cash in a certain sector, let's say real estate. In my case, because I really understand real estate, it makes sense to me, I'll keep a lot of my money in there. But then I'm going to have 10% in crypto, and I'm going to have 10% in other equities like the public stock market or private placements with, say, tech startups. And inside of that 80%, I'm going to divide that up even further, that I'm never going to have more than a certain amount of cash out with each operator. And I'm going to have a certain amount of cash in my own personal projects that I own without any partners, those types of things. So you just sit down and you say, here's the size of my pile. I really would like to get into a multifamily general partner operator role by just putting some cash in. And I know that they're not going to talk to me unless I have 500 grand in there. That's some pretty serious money. So I would never do that until I had, maybe $1 million or 1.5 million to invest. So I could take that 500 and put it in. All responsible funds will do this. They have a max allocation of the fund that can be invested in one deal. It's usually somewhere about 25 to 35%. And you'll read about that in the fund literature. Now, if it's a single offering fund, like an apartment building, obviously 100% of the money that's raised in that fund will go into that property. But we're talking about multi-offering funds where they're going to be investing in multiple properties. And so just being able to say, okay, if this is what the big guys do, and they are not investing more than a certain percentage of their cash into one deal, then maybe we should follow that pattern. Somewhere I would say between 25 and 35% seems pretty reasonable. Now, if you only have $100,000 to invest, you're going to be a little bit more risky because the minimum is 50 grand. So you put 50 here and you put 50 there. And so you just have to adjust that to your own situation. But within that group of business people, entrepreneurs, and investors, we had another couple of experiences where one person was telling us to invest in what eventually became, a Ponzi scheme, and how things were going really well for him, and he was making a bunch of money off of it. And so I just looked up the guy who was running the fund, the Ponzi guy. At that point, he had no criminal background. He had no red flags. You look up his name and you say things like court cases, lawsuits, or just look up his name in general, or you look up his name and put the name of his business. And I couldn't find anything. And so what I ended up doing was looking up the other guy who referred him to me. And boy, he did have a history. He was buying trustee sales, which is basically when you go and you buy foreclosures in the courthouse steps. And before it went to the auction, he would meet with the homeowners and try and figure out a way to help them save their homes, which is something that we should all be doing if we're working with people who are getting foreclosed on. How can they save the property? And so one of his techniques is he was giving them loans, and this is very, very common, giving them kind of expensive loans to be able to save their home. And then if the basically the second lien, or they would pay off the mortgage for them and then carry that at a higher interest rate. Well, this guy, it was deemed to be predatory lending, and he was indicted on engaging in these predatory lending practices, lost his broker's license, left the state and took up residence in our state. And the first thing he did was start that business right back up again. And he had a charge of brandishing a weapon because he was in some kind of seedy areas. But this particular one, he was in kind of a nice area, and one of the other neighbors didn't want him there because he kind of was looking suspicious driving around the neighborhood, whatever. And so he brandished a weapon at this person and was charged with that. And so I was just like, my trust level just went way, way, way down. He's a successful real estate investor. Everybody really looks up to him. And I'm sure he has a perfectly reasonable explanation about why all this stuff happened, but it just keeps happening. It's almost like he's just putting the chase of the dollar above the ethics. Now, was he doing anything unethical by investing with his Ponzi scheme? No, he lost his money too, but it just showed me that maybe he didn't have the best judgment when it came to this stuff. Then we had another investor friend who invested in this Ponzi scheme who recommended that we get involved. And I knew this guy really, really well. But he had learned real estate investing from a guru who happened to be a relative of his, like a famous guru was his relative. And so I looked up the guru and found just some, I wouldn't exactly call it shady, but just really not delivering on the product that he was selling. And he didn't really get high marks for being a guru that you could actually replicate what he's teaching you. And that's where I learned, remember those Carlton Sheets infomercials late at night? Carlton Sheets actually rated the top guru on this as I was doing all my research on these gurus. And so I hear a lot of people at RIA say, I got started with Carlton Sheets, late night infomercial that I bought into. And that's how they started all those years ago. And it's like, he's the guru I hear over and over and over again, who actually changed people's lives. Now, maybe they moved on and they're not doing what Carlton taught, but they got involved in their local community. They were networking, and they've ended up building. I've seen more people build real estate businesses out of his material than any other material. And this particular guru that was my friend's relative, again, very well known, really great books, like Rich Dad Poor Dad style books, but his actual programs that you would buy teaching you how to do this weren't really that great. And so people felt like moved by him, but then the program ended up being kind of a letdown. So he started teaching me how to invest in real estate, and we were doing courthouse stuff, and he just couldn't do any more of it because his name was basically getting blacklisted by the judges. And so he was like, well, let's put your name on it and you go to court. And I don't know, I was just like, and we'll split it, which looking back was a totally legit thing to do. It just seemed shady to me because I was a little bit ignorant. And then he came back to me later and asked for a hard money loan, and he was offering 10% for, I think he needed like $100,000, but that $100,000 was all we had saved up at that point. And 10% sounded pretty high to me. Now, again, looking back on this, 10% is a totally normal return to expect on a hard money loan. I could have gotten 12, but 10 was like, oh, that sounds risky. So on the one hand, some of these opportunities I missed out on because my tinfoil hat was on, and I was too ignorant to know that what he was offering me was a legitimate option to invest, like doing these court case proceeds, where he was basically buying tax liens and then going in and getting the excess after the auction. Things like that. It was, like I said, totally legitimate. I know people who do that now. And so I missed out on that from my ignorance. He offered me this hard money loan. I missed out on that because of my ignorance. But we did say, we can only loan you a little bit. We can't loan you the whole 100 because that's our whole pile. And that's not smart. And he needed the whole 100. So he's like, don't worry about it. So that was why we didn't invest with him on it. He ended up being a totally legit investor. He's still a full-time investor. and supports his family very well. And he's, all around good guy. But at the beginning, I was just a little too ignorant to really learn from him because I just didn't know what was going on. And he should have said, hey, go to the local RIA, go read this book. Like, he didn't really mentor us in the way that maybe he could have. And that's happened so many times. Our neighbor who owned like a bunch of storage units, and he's like, hey, let's get you guys into this. And he was never asking us for money. He wanted to help us start our own storage business because he's like, there's more than enough to go around. And I'll teach you how. And we just never did it. We just weren't ready. So, I mean, you'll miss opportunities that are great, wonderful, legitimate opportunities because maybe you're too careful, which is our problem. We've actually lost out on more money making by turning things down than we would have lost if we'd been a little bit more aggressive and just accepted that we're going to lose some money by some scammers or some fraud or some mismanagement or incompetence or whatever. So that's another lesson there. Like, how much money did we not make by not trusting people who ended up being valid? So that's another survival technique. Be careful, but don't be too careful. Don't be pessimistic and grumpy and all of those things that are going to keep opportunities away from you. So then there's another opportunity that we had, during this same period of time by a relative of ours. And he was saying that he invested with some guy and he had graduated from a very prestigious school of business. He had a master's degree from a top tier business school. And so I didn't know him very well. He was a relative of my husband's, but we had, great conversations when we're getting to know each other. He's very, very smart. And he told me to invest with this guy. He's like, if you're looking, because at that time I was hungry to invest, but I just didn't know enough. And so I was too timid. I had never put any money with anybody or anywhere, but I'd never bought a rental or done any of that. But the seed was planted when I was a little girl, when I was asking my mom, like, what did your parents do for a living before they retired? And she said, he was a career Air Force, but then he was really good at the stock market and made $1 million and retired. And back then, $1 million was still a lot of money to retire on. And so I was like, oh, my grandpa did that. I should learn how to do that. So I dabbled with learning and all this kind of stuff, but never had really done anything. And I had all those kids and they were super distracting. And so I've kicked myself more for the opportunities I didn't take, honestly. So anyway, this particular person he knew that I really wanted to invest and really want to get into that, was hungry for it, but it just didn't know what to do. He said, you should try investing with my guy. I said, sure, I'll look into it. And he was telling me about these great returns. And I kind of stopped and I said, is this guy ethical? And that was, again, the first red flag when he's telling me how wonderful he is and the kind of the guru status. And he just got real quiet and he just goes, I mean, yeah, he's ethical. And that response from him and that body language told me that there was something going on here that I didn't really know. But I was still, again, I don't want to miss out on opportunities just because I have a red flag. So I'm going to go and do my research and do my due diligence. So I looked up this guy and his fund and wasn't really finding much. So I was like, well, let me just sign up and throw, a couple $100 or whatever. It was a low minimum, which is another red flag. Low minimums in private funds are pretty uncommon. You want to see at least $10,000. Usually it's going to be somewhere closer to 50. It's going to basically, like, if someone's selling something super, super expensive, you should be suspicious. But if they're giving it away for free, you should also be suspicious, because that's when like the super expensive classes come later, So it's the same kind of thing, super low minimums. I want to throw a little bit of money at them. So I go to sign up for the fund and they won't take my Gmail email address. It keeps getting rejected. So I texted my relative and I said, hey, I can't get signed up. And he said, oh, well, you can't use Gmail. You're going to have to use one of these other email servers. And he sends me to some little no names that I'd never heard of. And the websites look kind of suspicious. And I'm like, okay, so legitimate email hosts have basically blocked this guy. Because you can't even sign up for his list using a legitimate email address. And so that was like, I'm done. So I did one more search of him and finally found something. He was living in Canada. He fled the country. So he's living in Canada. And he basically was giving an interview about why the SEC was doing a witch hunt on him. So I was just like, okay. And he was talking about basically how awful the SEC was and how they were just making it so like people couldn't invest money and they couldn't make money and all this kind of stuff. And so it was kind of difficult for me to just be like, okay, so he's living in Canada. He fled the country and talking about what the SEC is on a witch hunt. Now, I'm no lover of the SEC, right? But if they're investigating somebody so much he needs to flee the country, I was like, done, I'm out, right? And so I just texted my relative and I said, hey, I'm just really not interested in this investment. It just seems too risky, too shady. I don't think I used the word shady because I was trying to be nice, right? So it's just not a good fit for us. It's just there are too many red flags. And he's like, okay, well, let me know if you change your mind. It's been really great for me. About 6 months later, we got a big group email from this relative apologizing for recommending this to us, that his last 10,000 that he put in was lost. So he basically put all his gains back in. And at the end, he ended up at net negative 10,000, which, to me is like pretty lucky that he got out with just that $10,000 loss. Apologized for recommending him to us, that he basically was irresponsible. And if any of you lost money, I'm really, really sorry. And I don't think this relative and I have really ever crossed paths again. He lives in another state and, it's just like a distant kind of relative. But that was basically my experience. Is like even a relative that my husband had known all growing up and we trusted and had graduated with this prestigious graduate degree, got sucked in. And how was he missing those flags that you couldn't use a Gmail? You could, that he's living in Canada talking about the SEC, which I'm like, those are, to me, those aren't just red flags. Those are like, duh moments. And so, that was how we avoided basically that big Ponzi scheme. And it was suspected of being a Ponzi scheme. At the time, I was trying to sign up with my Gmail. We already knew this. He was already under public investigation for it. Now, the SEC keeps investigations private until they're ready to make some charges. And so the fact that it was out in the public was a big deal. So, and then we'll move on to a couple of, I've got more. An experience we had where when we first finally started real estate investing, we had bought a fixer-upper in our home state at that time, and we had sold it when we changed states and made a nice little chunk of money. And I started buying little rental houses and trying to flip some stuff and all that. And so I was just learning how to wholesale and these kinds of things. And one of the guys I was learning how to wholesale from was very upfront about his indictment. Basically, he didn't serve any jail time, but told us the whole story because it's, again, I need to get out in front of this and let everybody know before they choose to do business with me. But he waited to tell me until I had already signed up for the classes. And to me, it's like that should have been told to me during the investigation phase when I was meeting them and decided if I wanted to sign up for the classes because I had to travel there. It was a big deal. And he told me there during the classes, which I was just like, this is great that you're getting out in front of it and everything, but this information needs to come out sooner. And so that's a red flag if they do tell you, but they wait until after you're committed. I should have just stood up and been like, you know what, I want a refund. I'm done. Like that was shady. And I've since gone on with that group and, they've been great. Right. But, I did make my money back from what I learned in the class, but then they did something that I thought was a little shady and didn't deal well with me according to, our agreement. And we have yet to resolve that. And so that should have been a red flag that and not that I'm losing money with that. It's just that there's more money to be made and they are not honoring their side of it. So again, that's a red flag. And his situation was basically they were illegally taking funds into a bank account and they weren't going through the business bank account or the funds bank account. Basically, as he was, the guy's business partner, his dad was doing this. And then he got a warning by the SEC, stop doing this. And so he's like, he's like, we know you didn't know that was wrong. And so he got his warning and maybe even a fine. And then he started doing it again because of his clients or his investors were like, no, you've always done it before. Why can't you still keep doing it? Because they don't want their ex-wives or the IRS or whatever to know they have this cash. And so they're going around having basically to report this because you have to file in each state where you collect money. And if they went into the personal account, then they could avoid that state filing. And so the second time around when he got caught doing it again, the son got embroiled in it because he was now the business partner. And he was like, I knew it was wrong. And I even knew it was illegal, but I didn't know that I was culpable or liable for it because I wasn't the one doing it, but his dad, his business partner, was the one doing it. And so you'll hear that a lot. I knew it was wrong. Oh, I knew what he was doing was wrong. I just didn't realize the consequences were going to be an indictment or jail time. Again, a huge red flag after the fact that they were willing to overlook stuff. They were willing to do things they knew were wrong, or that even if not illegal, certainly violates financial ethics, the fiduciary duty they have to protect your investment. And so to me, that's a big red flag. And so, like I said, doing business with him was fine, but he got me involved with some other people who weren't fine. And that's kind of the thing I learned, where we had a financial advisor who was basically telling us to do things that we did, and thinking that our financial advisor is giving us good advice. And then when we switched advisors, turns back and like, hey, okay, we got to roll this back and redo this in your accounting and your tax prep and things like that. That's another survival right there. Don't use the same advisor or the same CPA year after year after year after year. If he's doing something that is incorrect, that is some sort of fudging the accounting or some, hey, I got this technique, if it's not holding up with court precedents, it's not viable, because other people will get sued. And if that stands up in court, then that's something now, okay, you can do. And sometimes they'll even change the regulations so that you could do it. It did stand up in court, but they're like, that's a loophole or whatever, and they'll change the regulations, and now you can't do it anymore anyway. So when you're getting kind of out there on the edge, the cowboy with your accounting or your tax prep, what will happen if you get caught or you get audited, or anybody in his whole practice gets caught and audited, they'll audit everybody in the entire practice. And because if he's done it once with this person who just got randomly audited, then they'll do a more extensive audit, and he'll start catching it again and again and again and again. And if you're with the same person year after year after year after year, you're more likely to get caught up in these types of things. And so I always will switch the CPA, and I will switch the financial advisor every so often for a fresh set of eyes. If the person before has done something incorrect, then we can file an amendment on my taxes, or we can change the way we're doing my bookkeeping in a way that is just a little less cowboy. And the more opinions you get, the more consistency you're going to get. You're going to see what the outlier and more risky practices are versus what tends to hold up advisor after advisor after advisor. So when I switched advisors, I realized, okay, this guy was really not doing, a good job. And then that advisor recommended me to invest with somebody else who ended up, I still don't know how this dude ended up, because I did get my money back. I fought and fought and fought and fought. And it looks just like a case of disorganization and procrastination. But it took me 2 years to get my money back after a 12-month investment of fighting with him, and finally had to do a confidential settlement. And if you're involved in these kinds of things, you're seeing these kinds of things, you don't even have to be the one involved. Like, for example, back in the Ponzi scheme days with this guy, when we were first getting started, I was suspicious, right? I didn't know, and I didn't want to invest with him. I should have reported him to the SEC. Once I thought, if you choose not to invest with somebody because you've seen certain red flags, you can report that. You don't have to have lost money. You don't have to have been involved. It's just something you research. This guy's fishy. The more reports they get, the more likely they are to do an investigation. So I have reported several people to the SEC for investigation, and the investigator will call me and take an interview and get some notes or any documents that I had, if I was involved or if I was not involved, just any information that I had. And then they just take that, and then I never find out what happens. And I don't care, because my thing is like I said, I don't love the SEC. I do think they make it a lot harder to invest, for genuine people to invest in things, and they kind of block off avenues of investments that you're not even allowed to hear about, which they're looking at changing that, right? But if people are committing fraud and taking money and doing things that are shady and suspicious, that's what the SEC is for. So I have no problem reporting things to the SEC. I don't do it a lot. It's usually when it's pretty compelling. I'm like, this is not right, right? But you can report, and I would recommend, that's another survival thing. Like, get that guy, off the streets, so to speak. There's one guy that we invested some money with, who I did some research, looked up his company. He was on the speaking circuit, so a lot of people knew him, and everything looked up and legit. And one of my friends had invested with him, but he hadn't come full cycle with her yet. She hadn't actually gotten her money out. And so you need to ask for people who've gotten their money out successfully. And again, that even doesn't mean anything, because it could be a Ponzi scheme. So I went ahead and invested with this individual. But then when things started to look like what's going on here? I did some more research and I used words like court cases, litigation, lawsuits, convictions. I would put the name and the company name, and I would attach these things, criticisms, bad experiences. That's when I started finding the stuff, not before I invested. Because before I invested, I just looked up his company and his person, and everything looked fine. And make sure you look up those specific search terms, and a 15-minute Google search. That's all it takes. And if you really are still wanting to invest with that person and you're getting kind of like a weird feeling, but everything still looks legit, you have two options: listen to your gut and just don't invest, right? But again, you could be too careful and turning down too much stuff that's legit. You could also spend $100 on a private investigator. If you're going to put 50 grand or 100 grand or 200 grand in with somebody, what's a couple $100 on a PI and a lawyer to look everything over? It's like you're stepping over dollars to pick up pennies. It's like you're not doing your proper due diligence because it might cost you a couple $100. Well, if you're too poor to afford a couple $100 for a lawyer or a private investigator, you're too poor to invest. You're too poor even in your mindset. You might have the cash to do it, but you don't have the right mindset to do it. So some people will just be like, well, it's only 50 grand. I'll go ahead and throw that in. If I lose it, whatever, because they have $1 million to invest. So really, you have options. And just to understand that. Always check them on the SEC website. I have a lawyer who will do securities fraud background checks for me on anybody I ask. You can be charged for it. They might do it for free. You have options. And so these are the types of things that you just need to kind of watch out for. And we're going to go back to kind of what we were talking about at the beginning, how to identify the body language and the things that they're putting out there. I would say the ones who are giving you kind of an off feeling, it could be because they're scamming you, but it could be because they're just socially awkward. And so you're going to look into the company, you're going to look into their background, and they're not going to have any criminal charges or investigations against them the first time that they do it. The first time it happens, they're totally clean. And so what I'm looking out for, people that are way, way too charming. They really know what they're doing. We hit it off. And here's the reason why they're so charming, is because they are listening to you really, really well. And they're asking great questions, and they are finding out what makes you tick and what you like and what you need, so that they can present themselves and their case to you in a way that's going to be most appealing. And so they look like really charming, great listeners and great guys. They're always offering to help you with anything that you need, because the more that they can learn that they can help you and learn about you, the more favors they can start asking, the more indebted you feel to them. It's just a classic narcissist trait. Sociopaths do this as well. And you're going to see a lot of narcissists and sociopaths in this business. Learn how to recognize them. Just get on YouTube, Charisma University or Charisma on Command. You're going to be looking up, body language, the body language panel, the body language guy, like these types of channels on YouTube, or reading, anything by Joe Navarro on body language, and, Chris Voss on negotiations. He doesn't get so much into the psychology and the body language, but he tells you how to talk to people and how to recognize what's going on. So just educate yourselves on human psychology, human body language. It's not just going to help you in avoiding scams. It's just going to help you in your business, even your personal relationships. So be watching out for these types of things. Now, what I've noticed with the ones who are just giving me a little bit of an off feeling, they're just putting out like clear narcissist vibes. I'm not saying I wouldn't invest with a narcissist, because it's actually a lot more common than you might think. But if it's a narcissist that's making my skin crawl, yeah, I'm not going to invest with that guy. And what I've noticed is that what most people do, if they're not narcissists and sociopaths, and they do get themselves into trouble, what usually ends up happening is an investment is going bad. The investment is starting to go down the tubes. And if they have a project that's doing well, they will take money from the project that's doing well and then move it into the project that's not going well. And then when the project that's doing well now doesn't, it's underfunded, basically starts going down the tubes, or we have some sort of a dip in the economy and all projects are doing poorly, they basically lost investor money because they skimmed it from a successful project to put it into a struggling project. That is illegal. In fact, we just had to sign a new operating agreement addendum that we can't pledge the company money to loans for other companies, things like that. Like, that's all in the fine print, that you cannot do that kind of stuff unless it's your own business, but you can't take investor money and move it to a project That's the whole point of the private placement memorandum, is they're telling you exactly what you're investing in, how your money's going to be used, where it's going. And if they take that money and move it on to a different project that's not included in the scope of that fund, they cannot do that. It is illegal. And they're like, oh, I just was like trying to move money around and just keep everything afloat. And that's why they didn't know it was illegal, mostly because they're raising money illegally in the first place and they didn't even have a PPM. And so learning the laws of how to raise money is going to save you from being taken advantage of by somebody, because if they don't know what they're doing when they're raising money, they are much more likely to inadvertently commit fraud because they don't know these ethical accounting techniques. You know, they're not familiar with GAAP, they're not familiar with the SEC protocols, because they just aren't sophisticated enough. And those are the guys who get themselves into a lot of trouble, and they'll get your money into trouble and you lose money with them, even though they're not bad people and they don't have criminal mindsets. They just don't know what they're doing. And so educate yourself on properly raising money. And that's going to do doubly good for you, because if you ever get to the point where you want to run a deal like this, or you want to capital raise for a deal and just get a little bit more on the active side than the passive side, you don't want to go to jail either. I mean, jail's not fun, and it will forever affect your ability to do business if you go to jail for some sort of a white collar or business fraud crime. So when I first got into this, because of my experiences in my previous years before we started actually investing, I spent quite a lot of time researching white collar crime. Not because I wanted to avoid the bad guys, is because I didn't want to be a bad guy. I didn't want to be unsophisticated stay-at-home school mom going out committing securities fraud, because I just didn't know what I was doing. And I guarantee you, most of us are in that crowd. My securities attorney spoke at my meetup a while back, and his opening statement was, he goes, 95% of real estate investors are raising money illegally. And he said, you guys are actually doing a lot better than the average capital raiser who are doing it for private equity and startups and things like that, because 99% of them are doing it wrong. And then he went through all the ways that you can legally raise money, and then the pitfalls of mistakes that you're making to avoid. And that was at the beginning of my investing journey, was just really valuable for me, because most people who end up in these situations don't ever expect themselves to be there. They don't know what they're doing is illegal, these types of things, because they're not working with a securities attorney. They're not doing the proper documents, paperwork. And I mean, I've had lawyers look over contracts and investment agreements, and they say, hey, everything looks fine. And the investment ends up going bad because the person just doesn't know moving money around and protecting failing investments and how to shield those from the rest of the portfolio. It's basically like, don't take money from one project and put on another project. I mean, that's the ultimate duh. Like, don't do that. And if it's in a joint venture versus a limited partner, you have a little bit more leeway there, but you still need to approach those partners. You need to ask them for a loan from the business so you can go save your other business. They have the right to say no, these kinds of things. Just go through the proper channels. If it seems weird or shady at all, like there was one I heard about where he was buying houses and then he was selling these houses to his other LLC. And then at a profit, or so, I can't remember what the deal was, but it was just how he was self-dealing and trading properties between it to kind of drive up the price, and then he'd put it back out on the open market and driving comps that way. I was like, and they're like, hey, I figured out a way to do this. Like, oh, that's another red flag. My CPA says that, if your CPA is the only guy doing it, CPAs lose their licenses and go to jail all the time. So just be watching out for this stuff. You have to be educated, because you don't want to commit white collar crime and get yourself in trouble. And the more you're educated, the less likely you are to fall for other people's scams, because you know what the deal is, but you're also more likely to be able to take advantage of opportunities, because stuff that sometimes smells a little funny, like I've seen in the past, in my own past, ended up being great and we missed out on it. So I would say that that's probably my biggest thing, is just the more you know, the more you understand, the better decisions you can make. You can mitigate losses. You will have some. Just mentally prepare yourselves for that. So I used to study martial arts, and my teacher said to me one time, when we're getting to the part about self-defense in a knife fight, I said, well, what do you do in a knife fight? Like, I'm not carrying around that kind of stuff. And he says, the first thing you do after you, maybe throw your wallet and see if he'll chase it. But if he really wants to fight with you, the first thing you do is just get straight with the fact that you're going to get stuck. You may win this fight and you may get him away from you, but you are going to get stuck if you're in a knife fight. And sometimes that reminds me of investing. I don't really want to be swimming with sharks. I want to be hanging out with people who are honest and trustworthy, and you're like scuba diving with all these great fish. But when a shark comes up and you do battle with it, you might probably likely gonna get stuck eventually. And so that's the way I look at it. I'm going to lose some money. As long as my average is good, the losses will kind of mitigate it, and I'll still have a pretty good overall average. If you let yourself be drummed out of the game because you're afraid of losing money, then you will miss all the opportunities. And so you can't have 100%. You just are not going to get 100%. Some of them you're going to lose money because the investment just didn't go well, right? Some of it's just because they're incompetent. Some of it's because they did something illegal, fraud, scam, or some of them set out to defraud you, but it's usually in between somewhere. People self-justifying that what they're doing is fine. They're just trying to blah, blah, blah. And they get themselves talked into the fact that it's okay. This guy with the Ponzi scheme, it was one of the biggest Ponzi schemes in that state's history. He stole so much money, he could have gotten life in prison. As it went, he only got, I think it was right around 20 years. He's been in prison now 6, 7, 8 years. Still says, I just had some investments go wrong. I tried to do my best to protect my investors. This is just investments that spun out of control. Will not admit he did anything wrong. You don't look at a life sentence, you didn't do anything wrong. If he can convince himself and do those mental gymnastics that he just got caught up in some spiraling downward investments, anybody can. And so I'll leave you with this one final story. This one didn't happen to me, but it was by somebody who was speaking to me when I was in business school. That she lost her accounting license because of some fraud. And so the only real accounting work she could do was to become a public speaker about how to not commit fraud and how to avoid fraud. Her thing is she worked for mom and pop type of store, but like a wealthy mom and pop. And she was their only accountant. And over the course of several years, embezzled almost $1 million because she was using company credit cards to pay for things and then not paying the credit card back, and just was little bits. And it ended up being like, oh, I forgot my credit card. I'll just use this one. I'll pay it back. But then she didn't. And over time, she's like, you know what? I really want new furniture. And it's been a long time since I got a raise. So I'm just going to go get it. And then when they give me a raise, I'll pay it back. Like these mental gymnastics. And it went on for 6 or 7 years. And she finally had an attack of the conscience and went and told them what she did. This tells you that this is not a bad person. This is not a person who sets out to defraud someone or commit a crime. She went through an amazing amount of mental gymnastics to justify this to herself, and even self-reported, came clean at the end. And they just cried. They're like, you've been like a daughter to us, and I would love to just let this go, but we cannot. We have to report it. So they had to report it. She lost her license and she went to prison for 3 years. And now what she does is she goes around and does public speaking and warns basically business school students, accounting students. And her big quote that really stuck with me was, if you think that it can't happen to you, you're in far more danger of it happening to you. It can happen to any of us. We can become a victim. We can become a perpetrator. There are a lot of rules to follow. Learn what the rules are and just stay way above board, because there is no amount of money that is worth you going to prison. And there is no amount of money that is worth you putting your entire nest egg with somebody who's not going to care for your money well. So I would say that those are my 2 big things. Don't miss out on opportunities. Don't be too scared, but don't fall for them. And don't think that because you're a good person that you're immune to them. So that is my story. I'm sure as years go by, I will get lots more stories. I have more that I could even tell that I didn't mention here, of people I know or stories that I've heard that I didn't personally experience. But just listen. When people say things like, I lost everything in 2008, ask them how. Just listen. When they say I lost money to this guy, or my family lost money in this situation, ask how it happened, learn, and then read lots of rules. The more you know, the more you can keep your nose clean. So appreciate you guys having me. If anybody has any questions, happy to take them. If you want to follow up with me at the end, you can find me at Emma Powell 28, basically on all the social medias. On Instagram, I'm Passive Income Adventures, because I'm moving over to becoming a 100% full-time passive investor, but also like a part-time capital raiser. And so these kinds of rules and these kinds of scams and these kinds of things are very, very relevant to me as I'm looking at becoming more passive, but also getting out of the management side and doing more capital raising. Definitely want to make sure I don't fall into these same traps that we talked about today. So anyway, if you want to reach out, would love to chat with you. If you want to learn how to raise capital, we can help you out there. We raise capital as a joint venture for different projects together. So even if you're not capable of raising a lot, we basically just band together and make a little business, and then we go into larger deals as joint capital raisers. So that's what we're working on right now.
One question, and then I would like to kind of point out some of the things I learned today. So obviously you are also raising capital, but there are bad actors, but there's also good actors like us. Like, how do you, when you talk to new investors, or how do you go about doing your business to make sure you're doing everything you're doing right? Or is there something that there's takeaways to make sure we are going on through ethical, through knowledge? And I guess for me, I would be I like to give very precise answers to all my investors. So I think that was something that you brought up, like in our previous conversation. What are some things that you work on your own in your business?
Well, I think the first thing is that if I'm feeling any sort of hesitancy from someone, I will pick up on that and I will tell them, invest the minimum, not just with me, with everyone, until you really learn your way around. You're going to want to get a group of operators that you trust, that you've vetted out. And even those can go bad if an investment goes bad. Ask them about, what investments have you had that went bad and how did you handle it? And if they've never had one go bad, that's actually not great, because they're either lying to you and not telling you the details, or they just haven't been around the block enough times to deal with it. They could be just super optimistic. And so I've had investments that kind of went bad, but it wasn't anything that bothered the investors, because it wasn't like we were losing money. We just had problems, like we got a fire, right? Or, hey, we're running out of money in our construction draw and we're going to be kind of short until we refinance. Like those kinds of problems, even though the investment itself didn't go bad. They should say, we've never had them go bad. Everything's been great. Like, you want to hear things like, well, sometimes we have things we need to deal with, and hear stories about it and how they handled it. If it did go bad, what were they disclosing to the investors along the way? And then just put in the minimum. Just put in the minimum, and I will introduce you to other people that you can invest with, because this is a relationship business. I'm happy to make the introductions. And I will point them, and they invest with other people. Sometimes I have a couple of them, they've never put any money with me, but they've invested with a bunch of the people that I introduced them to. To me, it's like, put in the minimum and then see how professional they are. Do we send out our reporting when we say we're going to? Are our newsletters going out on the date they're supposed to? Are your distributions coming out on the date that they're supposed to? Do you have to chase us down and say, like, hey, you didn't get my distribution this month. I told you I changed bank accounts, and you sent it and it didn't go anywhere because that old bank account's closed. Or, hey, I've asked, the last 3 distributions, I need you to update my bank account information because I'm not using that one anymore and I keep having to transfer it out and it's a pain. Are they listening? Are they taking care of details? Do they have a staff? If you're going to invest with somebody who's a new or young investor, or first-time investor, you shouldn't be new either. Like, we've had people invest with us on our first deal because they believed in us and wanted to give us a chance, but they were not new. It was not their first time, and they put in the minimum. Everybody put in the minimum because we didn't have any base. And there are a few people who into the project ended up putting more money in because they believed in us and trusted us and all that. But at the same time, if somebody had come to us and said, I want to put in 300 grand and it's all the money I have in the world, I would have been like, I'm not taking that. I don't need that kind of responsibility. So those are the kinds of things that you should be asking your sponsors. If they're pressuring you to put in more money than you feel comfortable with, if they are not telling you, like, just put in the minimum and see, how this goes. If they can't really give you good answers to, tell me about a time when your investment wasn't going so well, how did you handle it? Tell me about a time when you had to tell investors something that you didn't want to tell them. Like, how did you handle that? Just and things like, what would your partner say is your greatest strength? And then ask them, what would your partner say is your greatest weakness? Because they will tell you their own weaknesses. is if they're getting to phrase it from their partner, their business partner, right? Whereas otherwise they'll say things like, what's your biggest weakness? It's like, oh, I'm too detail oriented. I just really spend way too much time in the detail. That's not a fault. It's like a fake fault, right? But ask them like, what would your partner say is your biggest weakness? And then they might start talking up their partner and say, oh, he's really great at financials and I'm really not good there. So he's a really good compliment. They'll talk more about their own weaknesses. If you ask them what another person would talk about their weaknesses and what another person would say. So that's how I talk to my guys. And you just can't if somebody wants to teach you like how to analyze deals or how to underwrite deals, and they want to give you the tools to make independent decisions, that's always a good sign. And if they just want you to trust them and put your money in and all that, that's usually a bad sign.
Well, thank you so much, Emma. So I just want to point out some of the things that we learned today. So from some of the red flags you mentioned is, one is not when you don't have a very good feeling. That's probably a first sign with someone. Second is if the business plan is they invest in stuff, that's pretty big. So you probably should avoid that. Very specific. They should, if it's a business, they should be very specific, and you should have specific details on how that business is conducted. Third, follow what other sophisticated investors do, which is diversify. So you have to think about a target and where you feel comfortable, even diversifying between operators, market, and the deal itself. And number 4, watch out for guru status. Everything you can be learned, but don't glorify guru status. So something to think about and do your research. And there's this is something new that if their email system did not take your email or Gmail, that's very legit. That's very bad. Do your due diligence. Look at public SEC charges. Those are probably very legit out there. Some other red flags to look for: change your CPAs, get fresh eyes, and financial advisor as well. Just so you have more opinion. The more opinion you have, the better consistency you have. And there's one more: hire a PI or lawyer if you absolutely want to feel good about a deal. But that's PI and the lawyer, it's probably $100 to $1,000 versus where you're spending about usually the minimum is $50,000. So don't step over the pennies when you're trying to go over get a bigger protecting your assets. So. I think the last one is like make sure that they're it'll be getting educated and financial how they raise capital. Is it through a PPM? Usually that's where it is. So if they're not, then they should. That's also a red flag. So I think that's all I have on my list. So I don't know, Jen, if I missed anything. So
yeah, I mean, yeah, I kind of agree with you. I kind of don't think about this, but I like just to add on what Maggie said about like SEC search. I also like what you said about Googling them, and not just Googling their company and their Facebook page, but obviously Googling like complaints and court cases with this person's names would be often a good way to bring up any dirt that may come up. So yeah, those are really good takeaways from the stories that you told us today. Thank you so much, Emma.
Yeah, thank you for having me. Especially with what y'all do for a living. I think this is your bread and butter, is turning this kind of stuff up. And so I think that it says a lot about you as a group of operators. Like, how things are supposed to run, and that's the way you're going to run it, because you've probably seen a lot, people in your business, you've uncovered fraud and you've uncovered accounting irregularities, and there were consequences for the people who engaged in those practices, and you've probably seen more of that than maybe you even know about, because maybe you don't see the investigation that's following it up. But definitely know what's okay and what's not okay.
Yeah, no, you're right.
Definitely.
I think like having the audit experience definitely helps us with what we're doing today, and that's why we figure it makes sense. Yeah.
I do want to one more. Sorry, there was one thing that was resonated with me, and I just want to point that out. That what you said was, it's when you lose money, is you're not losing into these scams. You're not just losing the money itself, you're losing the trust and the ability, and you get burned and you will never get back again. So it kind of rob you for your money, but also rob for your hope and dreams. So something but also, that's something.
Yeah, that's probably the biggest takeaway.
Yeah.
You're gonna get stuck. Don't let it keep you out of the ring.
Mhm.
Love
Yeah.
it. Thank you. All right, Emma, we kept you far long than we had initially, thought you would have time for, but thank you so much for your time once again. I'm going to share your contact information when we share the replay of this video on to our investors and also on YouTube. So yeah, we'll send you a replay as well.
All right, I just
Thank you
popped
so
that in the
much.
chat there for you if you
Okay.
want to pass that out. It has
Got it.
everything on it, so
All right.
okay.
Sounds
Thank
good,
you so
Emma.
much.
Take care.
Thank you, man.
Have a good day.
Okay. Bye.